Okay, my apologies. The first half of this is just in the screen recording. I couldn't do anything about it. I had a power outage, so deal with it. Unfortunately, the quality does pick up in the second half, so I hope you listen to it. I think the first half was pretty good.
Daily stock day trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.
Good morning. It's Tuesday. It's Halloween, October 31st. You're going to hear a lot of ums, a lot of us. I've got so much crap in my notes today. But I want to start it out with one thing. If you're on YouTube Live, you've already seen this because I displayed it. But when I record live, I can't always hide stuff. So it's kind of like it's a shit show. I mean, let's just be perfectly honest. It's a shit show. But YouTube asked me, what's the second most popular country that listens to or watches you on YouTube? Let's go over here. Let's play a game. Second most popular is Ghana. So shout out to my African friends in Ghana. I don't understand why you listen to me. It's got to be freaking bots. I don't get a lot of comments. I don't know why you're doing this. But here's the thing. If you guys are interested in investing and stocking up on American stocks, hey, kudos to you guys. I mean, shout out to everybody over there. You guys know I'm a lover of the world. Boy, that sounded a little inappropriate, but I am a guy who just travels everywhere, says hi to everybody. I'm that annoying guy who's running down a trail saying hi to you as I pass you. I'm hiking, saying hello, and starting 20-minute conversations with people. So I love everybody. The fact that Ghana is the second most watched country or the second most listeners, I've never heard from anybody in Ghana, but comment down below if you're from Ghana. Hey, what's up? I need to Google what language is spoken in Ghana so I can say hello to everybody out there. Let's look at SPY. We got a button hook going on. Yesterday, a really good day in the markets. You've got this button hook coming up. We may have confirmation. We opened up today. It's 9:30 now. We opened up today at 416. Right now we're at 415. So you're seeing a red candle. Today is, it's the Fed meeting day. We shouldn't hear anything outside of the Fed meeting, but we should hear stuff tomorrow. A couple of things. Andrea sent me a message yesterday. FNGD, I said it was a bullish ETF. It's a bearish ETF, just so you know. Do your due diligence. Your boy is a little sick. I've got a thumb. Let me show the thumb. Yeah, I've got a thumb that's infected. So I'm on antibiotics. I blame the fever. But thank you, Andrea, for sending me that. SPY is almost a cross up. QQQ is almost a cross up. This will be interesting because if you go to QQQ, you can see it's almost a cross up here on the chart, meaning that the button hook is what I'm talking about. And when I say cross up, that MACD, look at that blue line. That's almost crossing up on the yellow strike line there. That's what I mean by cross up. Google MACD, understand the MACD, research the MACD. The MACD is what I trade with. It's the most effective indicator that I've found. So the MACD is what you'll hear me, when you hear me say cross up, when you hear me do the scans at the end, it's MACD. MACD is what my algorithm is based on. So if you get TRENDSPIDER, you can have my algorithm, by the way. The private sale ends in, 15 hours, 26 minutes, and 46 seconds right now. The Elite is what you want. Elite for $249 a year. I just got news about what the Black Friday sale is. It will not be $249.60. The Black Friday sale should start sometime next week. This $249 for Elite, by far the best offer of the year. By far the best offer of the year. I will tell you, if you want it, get it in the next 15 hours. I'm not putting pressure on you. You have to understand, if you're going to use it, it's worth the $250. If you're just going to sit there and kind of, read your Fidelity stuff and read the news articles, go over to Seeking Alpha. Get Seeking Alpha for $50 off, $189. That's the way you look at it. It's the top two Linktree, linktr.ee/daily stock pick. It's the top two. Yesterday's newsletter, by the way, if you go over to Daily Stock Pick, right here, there is a great a chart at the end of this. At the end of this newsletter, you can see I put in a chart that says fundamental analysis versus technical analysis. The fundamental analysis on the left, if this is more of what you want, it's Seeking Alpha. If the right side, technical analysis, meaning charts, cross-ups, things of that sort, if the right is what you want, that's TrendSpider. So I've got a good mix of both. Personally, I like both. And I was just going over with a friend. So say you pay $300 for TrendSpider. Right now it's $250, which is a great price for the year. But $250, say you spend that. And then that's your technical analysis portion. Then you spend $189, $190 on fundamental analysis. Say with taxes, fees, everything, tips that you send me for thank yous, it's $500 a year, okay? $500 a year. In that case, you should have at least a couple $100,000 that you're trading with. If you had $500,000 and you spent $500 a year, you're spending 1% a year. Now that's about what a ETF would take from you as a expense fee. So understand, you have to have the larger portfolio in order to justify these expenses. Don't think that just having Seeking Alpha or just having TrendSpider is automatically going to save you from losses, is automatically going to make you a better trader. Not at all. In fact, Brandon over here on Facebook, if you want to read this, go over to our Facebook group. You can find it on Linktree up here, the upper left, the Facebook logo. If you want to know, Brandon, I think it was about maybe 6 months, 8 months ago, he finally took to dive in on TrendSpider. This is kind of 101 why I do the podcast. Brandon was a guy who was losing money. He said, he found my podcast, listened to me, understood that, hey, I want to do a little trading a little bit more. IONQ, you guys hear me talk about it all the time. Well, IONQ, the CEO wound up leaving. It was in the charts before it hit the news. This article hit the news on October 23rd. October 16th, Brandon was in IONQ. He got out because the 4-hour and the 65-minute algorithms that I have said, hey, you should probably get out.
I am sorry. I had a power outage in my office at the house. So I heard the TV in the background. I don't know. I got this new thing called Ting, which monitors my electrical system. If you don't know it, is State Farm provided to me, and I may actually be canceling my State Farm thing. But what I was saying was, Brandon, one of these traders that kind of found my 4-hour algorithm. No fake boy stuff. So Brandon, I appreciate everything that you say, the nice words that you convey to me. I really, really appreciate it. Let's go back to the notes. 16 Mondays in a row. This was one of the best Mondays of the year. Nice rally, but it only took us Here's what you have to know about specifically QQQ and SPY. Even though yesterday's rally was good, we're still not back even to last week. On SPY, I think it took us back to about Thursday of last week. It took us back to here, Thursday of last week. Didn't kind of take us anywhere huge. Nice rally, button hook potentially, but it still did not move the needle. Yesterday at 3 p.m., the Treasury Department lowers the assessment for fourth quarter borrowing because of higher tax receipts. Bond investors now await data on the mix of debt for sale. That will happen to tomorrow, I believe. It might happen today. If the government opts for more long-term debt, the yields on longer issues will likely rise more. So if they opt for a 10 to 20 year or even 30-year bond, you're going to see that 10-year move up. However, if the government decides to fund its deficits with more treasury bills, debt of less than 1 year,
that will put upward pressure on short-term yields, which are also influenced by Federal Reserve monetary policy. The government releases data on the size and composition of its debt sales on Wednesday. The Treasury on Monday, in its quarterly refunding report, said it expects to borrow $776 billion during the October to December quarter. $76 billion lower than the estimates. That sent stocks up later in the afternoon. The amount would still be a record. Treasury, and here's the CNBC article so you can see it. Wednesday is going to be more info on what the Fed will sell. If it's longer term, it's not horrible news. It'll make the long term go up. If they sell short term, that could be really, really tough. This article was really good. The video is really good. I suggest you get on the newsletter and look at that. But Wednesday, remember, Wednesday tomorrow is going to be not only the data on this bond stuff, but it 100% will also be, is the Fed pausing? I think the market is 99.9% pricing in that the Fed will pause. So we've got some catalysts going on here. If for some reason today's pricing stuff that went up pushes Jay Powell to say, hey, inflation's still around, we're going to go another half point. Even though the bond market has done the work for him, it could get very ugly very fast. Now, yesterday's newsletter also included what to watch for the week. Today, after the bell, AMD reports. Intel, we saw the reaction from Intel. AMD, you have no confirmation on the 4-hour. That MACD is about to cross up. It would be a risk to buy it beforehand. I don't think it's a unheard of risk. In my mind, if you're into chips, AMD is worth holding, buying and holding. It's not a bad place to go into. If you're going to go down, I think you're probably going to the $85 level. If you're going to go up, I think you're probably heading to the 115 level. So that's just, if they come out and they say, hey, we can't catch NVIDIA until, our chips are delayed, our AI chips are delayed, or something of that sort, you're going to see this one come down. But look at that RSI. You're in oversold territory. The MACD is down where it was back here. You could go up a little bit from here. You had your death cross back here September 11th. The 200-day is now moving down on a 4-hour level. Remember, this is a 4-hour chart. This isn't a daily chart. The 50-day is starting to move more horizontally. I think you're fine. I am holding here. I think my average purchase price is somewhere in the 110 mark. Because if we look at a long term of this one, this has just been a weak kind of, you're hanging around that 200-day on the long-term weekly chart. The 50-day bounced right off of it. The 50 and the 200 are still positive. So you have no confirmation. Just understand there is no confirmation on the 4-hour. There is no confirmation on the weekly. There is no confirmation. AMD would 100% be rolling the dice and just gambling. Tomorrow, before the bell, we have Palantir. We have Palantir, which I've said is a $20 stock at some time by the end of the year. You have no confirmation again. That MACD is down below the oscillator. The RSI is at 28, completely oversold. You've got wars going on. You've got these guys in a contract with the Army. You've got the United Kingdom, potential healthcare stuff. I think you've got tons of catalysts on this. It is expensive. We'll go over to here to Finviz. PLTR is the symbol. Palantir, your forward PE of 54. You're losing $48 million. If they announce that they're making money, get ready for a pop. Is this the stock that could take some of these high-flying movers back up? Wednesday, you have Qualcomm. They came out. Yesterday's Apple event, and I'll talk about it briefly. I won't talk about it in depth. But the M3 chip made on the 3 nanometer technology that Taiwan Semi is producing, and it's based on the ARM architecture. If that means nothing to you, don't be afraid. It means nothing to me. I have no idea what I just said. But understand, it is a game changer when it comes to PC chips. And Intel is basically getting killed by some of these Apple chips. Now, Qualcomm said they have something that rivals even the M3 chip. They may come out with some type of thing that's going to pop this back up. This is a huge opportunity in my mind. I think this one trades between 100 and 120 on a regular basis. Do I think that this one's coming down? I don't think so. You saw what Intel did. Intel popped. And tomorrow after the bell as well, we have PayPal. I am less confident in PayPal than I am in the chips. This has been just a nightmare. We went over it yesterday. I should have sold with a nice 10, 15% gain up there. I just got greedy thinking that second gap, and it's back below here. This first gap got filled before I bought. I should have been out. Haven't been out. FinTech has just taken it on the chin. The CEO, it's the first earnings call for the new CEO. They're going to be talking about margins. It's going to be I don't have a ton of confidence, but I'm holding a small position. I'm hoping to buy into that. It's just been beaten down too much. I think it's in that territory where it's probably worth buying, but FinTech is getting squeezed out by Visa, by MasterCard. They're just getting, their margins are going down. If you don't have margins, you can't. It's the same thing as Tesla. We'll go over Tesla in a little bit. If their margins are coming down, even though your revenue may be going up, you're actually making less money as you shrink your margins. So Shopify on Thursday before the bell. I'm still a fan. You have no confirmation. It has not turned around. It's not above that 9-day. I put this green line in here as support at 48, blew right through it. It's at 45. I like this name. I don't know what's going to happen. I do think that November and December are traditionally strong months. Could be hurt. Eli Lilly. They report before the bell on Thursday. This one's down 1%, 559. You have no confirmation on this one. If you don't have a position in Lilly, I think you should probably get into it. If you don't think that they're going to hype up their weight loss drug and talk about some of the things that they've got going on and that millions of people will take this weight loss drug, you're crazy. It's a little bit expensive. Again, if we go over to FinViz and we look, what would worry me about Eli Lilly is the 52-week range. The 52-week range, which is 309 to 629. The average target price, 608. You're trading at 560. You're 11% down from your 52-week high of 60 to 629. Your target price is only 608, and this is a heavily covered name. So your most recent target price, resumed coverage, UBS, buy. They changed it from a buy. 612, they raised it to 710. Now, Jefferies, hold to buy. They raised it up to 615. You're trading at that range. If you haven't started a position in this, they could start upgrading. Again, this was an upgrade. This was a resume. Citigroup, back in July, they reiterated the buy to 525. You're trading at 560 right now, $560.48. That's a little bit expanded, so be careful with this one. I just think it's probably worth. Amgen reported today, by the way. Amgen was up. I think it was down. They mixed results. They have not been as forward with their weight loss drug as I would have thought on their earnings call. So I don't know what's going to happen with Lilly. The big one of the week, and we talked about it, Apple. This is going to drive the market. This is going to change the market up or down on Thursday. Unfortunately, if you're a paid newsletter subscriber, I think maybe down. This one could hurt. It could hurt because the valuation is high. It's just a little bit, it's hard to tell what's going to happen. You had this death cross happen right here at 181. You've been dragged down to 168. You don't have confirmation before earnings. That MACD was about to cross up. It hasn't crossed up. This one's going to be tough. The event yesterday, here's the best trader that I heard said the reason Apple surprised us with an event on Monday is because they know their MacBook sales are going to be disappointing on Thursday. And if that stuff is disappointing, if the iPhone is disappointing on Thursday, rest assured, I would not be surprised if this goes down into the low 160s, even the 150s. But understand, from a long-term perspective, if you're looking to get into this name, I don't think you're looking at the 120s. This popped right back here in 2020, in August of 2020, when they announced a 5-for-1 split or a 4-for-1 split. I forget which one. That's the peak of this. That went up to 137. That would be, in my mind, the absolute bottom would be 130. I don't think you're going to 120. I think they're going to announce a huge buyback. I think they're going to start buying their shares back because they think they're undervalued. That, in my mind, is where you go. Now, let's talk about some earnings yesterday. Pinterest. If you guys tune back or even go back to the newsletter to a month or so ago, when Pinterest dropped, maybe it wasn't even a month ago. I mean, look on October 25th. Look at that drop. Down here to the low was $25.55. I said it's a $30 stock. Well, yesterday they blew it out of the water. 28 cents per share. They reiterated, along with Meta, along with Snapchat, that the ad market is coming back. 29.26 right now. I think it's a $30 stock. I don't think you get into this one. I think this one is one that you trade. I like it. I like it a lot. Nike. Nike is one that I looked at yesterday. They have no catalyst, but this one's back over 100. Understand it's been beaten down. They've fixed some of the issues that they had. You had confirmation. This was a nice buy-in. The reason why I'm telling you about it has you out with a 3% gain. So you got out. You're probably going to get back in. Wait for it. I think it's a $120 stock. Again, this is a top stock. Now, Tesla. Tesla is one. EV stocks got absolutely killed yesterday, and let's talk about why EV stocks got killed yesterday. Tesla's shares dropped 5% on a Panasonic battery warning. Essentially, Panasonic warned the updates Stokes and Vector supplier to EV maker had reduced battery cell production in Japan during the period ending September 2023. I will include this article in the newsletter. So sign up for the newsletter, read that article, understand that Tesla has two things. The 5% battery, the 5% drop yesterday based on the Panasonic warning, the Tesla's down 18% since their earnings. That's not good. Remember, Elon said, hey, the Cybertruck will be the death of us or something like that. Very negative, super, super negative. Add to that, yesterday there were reports that Twitter is worth significantly less than what he paid for it. And people are worried. He may have to buy back some of the debt. Some people may be calling in their debt and saying, hey, we want our debt paid. We don't want to be in this, blah, 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 which may cause him to sell Tesla shares. So you're at 198 right now. You have no confirmation. There isn't, even though this is a completely oversold stock. The RSI is at 23. The MACD is down as low as it has been. There is no reason to get into this stock. There is no reason to necessarily get out of this stock either, other than if you think that it's going to, people have shorted this stock to their detriment in the past. One of the things that I did was I went over here to Seeking Alpha and I said, there's two levered ETFs for the short side, bear side of Tesla. And there's TSLS and TSLQ. Which one should I use? Well, assets under management, TSLS has 50 million. TSLQ has double that at 114 million. Still not huge. You scroll down here and you look at some of they perform fairly the same. Similarly, remember that they use derivatives, so they trade options to lever themselves short. Here's the dividend yield. This is 5% annual dividend yield on TSLQ. That's paid annually. 2.78 paid quarterly on TSLS. In my mind, I think you trade TSLQ. Just looking at it, I said, you know what? I'd rather have more shares, more assets under management. I just trust TSLQ. Not that you can't do TSL, but look at TSLQ. If you had my algorithm in TrendSpider and you said, you know what? Tesla's overvalued. I'm going to trade it here at $32.24. Right now, you're at $40.39. You have extreme confirmation over that 9-day. You've just crossed up. You had your golden cross right here, October 24th. Understand this is a decaying asset. Not because it's a bear, it's because they take fees out. So it's a decaying asset, so you will not trade for very long over the 200-day. Do I want to short it? I may. I think Tesla might be going down to 150. I think this may be one of the things that they have the Tesla Cybertruck event. They may bring down their production. I'm hearing that their demand is not what it used to be. So you may want to look at this one and say, maybe I want to short it. So tune into the newsletter, look at that one. We talked about Apple. Their M3 chip is based on the new Taiwan Semi architecture. Taiwan Semi's making their chips. If you want to invest in Taiwan Semi, I like this company. The only thing, understand, it has no confirmation right now, so I wouldn't necessarily get in. But owning this one, it is part of the core portfolio. Warren Buffett doesn't own it. He got in and he got out with quite a good trade. I think he was in this for like 3 or 4 weeks. It wasn't very long. He just thinks the China taking over Taiwan or moving in on Taiwan, too much of a risk. That's his thing. So that was his thing, and he doesn't like it. Continuing on earnings. Symbol O, which is Realty Inc., way down. Commercial real estate REIT agreed to acquire Spirit Realty Capital for $5.3 billion in an all-stock transaction. This will further diversify its tenant base at a time when commercial real estate remains under pressure. O Realty, this is a REIT, and so it pays out an enormous dividend. I think it's one of the most popular REITs, 6.6% dividend, down 27% year to date. Is it worth buying right now? Hell no, it's not worth buying right now. It is beaten down. They just are passing their dividend X date. Their earnings are coming up on November 6th. I think that purchase was in kind of preemption of, hey, we're having a tough time with commercial real estate. So be careful with that one. Simon Property Group. They declared a $1.90 share quarterly dividend in line with the previous dividend. Forward yield of 7.22% payable to December 29th. Shareholders of record on December 8th. So your ex-dividend date is December 7th. So you have to buy this by December 7th in order to get a dividend. But that 7.22% is solid. Solid earnings, nothing crazy, up 0.7. Meanwhile, the market's down. This one's holding on really well. CAT earnings, CAT. I own this one. They are way down. There's weakened pressure on questions whether the spending is going to be there for industrial stuff. So they're just, I mean, you look at a long term of this one. Do you want to get in on this one? I'd say you wait till you get to this 200-day around $200 per share. I just don't see the benefit of trying to jump in at 227 when your top is really 289, 290. I think you do have some support at 210, but I think, you know, for this one, there's no catalyst on this. Honest to God, the dividend was paid. There's no catalyst coming up. CAT is probably one that you can buy in on. It's expensive. For an industrial, farm and heavy machinery, the PE is 14. I mean, it's expensive. So understand it's down 4.51% year to date. They have a 2.16% dividend. I do own this in my small Webull account. And if you want to sign up for Webull, go over to Linktree down here, the third link right here. It's Webull. Get a ton of free stocks. I put $1,000 in there. I am currently sitting at about $2,400, somewhere around there. Amgen. I will include an article. Maybe I'll include an article. Let's see. Let's go over to Seeking Alpha. Amgen. We can look at Amgen. This is the one that I said, hey, if Eli Lilly's too expensive, Amgen might be one to buy. Yeah, this is, you know, Amgen Horizons pipeline may be too expensive. That's a buy right there from the Seeking Alpha analyst, 3.71. They're not super big on this one. If we look at it against Eli Lilly and you look at some of the ratings summaries, Eli Lilly's got a better Wall Street buy. It's about the same on quant. I just would probably stay out of this sector right now. To be honest, you don't have to rush into that sector, but they reported mixed results. Here, and if you want Seeking Alpha, by the way, this is kind of the cool stuff. Here, Eli Lilly went from hold to buy on the quant rating. Let's go over and we'll look at Eli Lilly again. Hold to buy on the quant rating, but it's still hold for some reason. I don't know why. But that's the email that I got this morning. Hold to buy. So you can get that email every morning. It updates based on your portfolio. I really like it. I kind of like getting it in the morning and seeing it. Here, trick or treat. S&P top 500, S&P 500 top and bottom year-to-date performers. Look at the top. You've got Adobe at number 10. You've got Amazon at number 9. Eli Lilly, I'm just talking about, number 8. Pulte Group, Home Builder. Number 7, GE, 62% year-to-date. Royal Caribbean Cruises, 67%. You can't, I mean, the amount of debt that these guys have, I have no idea why it's up 67%. Tesla, 68%. You've got way more down to go on that one. Palo Alto, I personally own. Meta, I personally own. And the number 1 that I personally own, NVIDIA. That one's going below 400. Get NVIDIA while it's below 400. NVIDIA right now, 397. The bottom performers, Illumina, I don't own. Etsy, I do own. AES, I don't own. Estee Lauder, I don't own. Dollar General, I don't own. FMC, I don't own. Insulet Corp, I have no idea what they do. Moderna took that one out of the core portfolio. It was a trading one. It is doing horribly. Enphase, I don't own. I wanted to own. But Solar Edge, I did own. I got out. Solar Edge is down even further, but I like this list. I like to look at that stuff every now and then. Again, Seeking Alpha kind of puts out some really good stuff. SRPT. This is Sarupta. Sarupta Pharma. This is therapeutics. This is what can go wrong with your biopharma stuff. This one was at open $109 per share. Right now it's trading at $60 per share. The low, if you want to trade this one, by the way, the low is $55 per share. You've got a 5% thing. Like I always say, any reaction in the market is an overreaction. SRPT, let's look at go over to Finviz and we'll take a look. What the hell happened? You got a downgrade from Oppenheimer with no price target. Stock doors after new gene therapy data. So all they have to do is release some gene therapy data and boom, all of a sudden you're cut by 50%. So hopefully nobody owns that one. I know some people do. Home Depot. And by the way, we're going to go into social requests just right now. Just know I will not be going over all the scans. There are too many scans to go over in particular, so I will include them in the newsletter. If you need to sign up for anything, understand Linktree is the central location, linktr.ee/daily stock pick. Linktree/daily stock pick. That's it. So go over there. You can sign up for everything. The newsletter is right down here. The fourth thing. If you want $20 off your first month's phone bill with Visible, you have all of the links to help support the podcast. You've got Savvy Trader. Go and look at Savvy Trader. Any of the links up here for the social networks that I'm on, you can get to me. If you want to email me, you can go over there. We'll go over that in a little bit. But Home Depot, D-Man wanted me to look at it. He left a comment yesterday on YouTube, wanted me to look at it. I think he's an employee of Home Depot, but $281.49. Ironically, D-Man, you've got a buy-in here, $281.49. You're trading at $283. I don't know that I'd necessarily want to buy Home Depot. And here's the reason why. Home Depot is tied to the housing market. And the housing market for me, I got to sneeze. But the housing market for me is a little bit, I got to sneeze. Oh, I'm glad you guys are listening to me. I'm needing to sneeze. But the housing market with mortgage rates at 8%, with potential of stuff going up and people sitting on 2 and 3% mortgages for the long term, I think the housing market's going to be soft. And I think that's what you're seeing in Home Depot, is that you can't take out a loan. You can't take out a loan in your home equity anymore without paying a shit ton of money to do it. So people aren't renovating as much. Now, you have the insider track on Home Depot. If you see contractors still spending the amount that they were spending, if they say they've got plenty of work, if they say, if people are still buying a ton of stuff, if your stores are still packed, you know better than most people. So while you work there, I think you even mentioned to me about an employee stock purchase program. Freaking buy that stock, because you've got, 320 is probably your high on this one. That's your top. I mean, look, go over to FinViz and look at your 52-week range, 350. 347 was the top. But you do have a lot of these moving averages. The 50-day, let's take a look at this chart, the 4-hour algorithm. You got the 200-day starting to move negative. You have the death cross of the 50-day still moving negative. The 21 and the 9 still moving negative. You have their earnings coming up, so you do have some type of catalyst. But I'd be a little bit skeptical because, look, $3.82, $4.65. They just killed it. And what happened? They're coming down. So expectations are super low for this earnings. If they blow it away, I would expect a pop. If they guide lower, I would expect this one to fall even further. If we go long term, again, Home Depot's not one that you necessarily trade, but I put this level in here before, way back when. I think this was probably a long time ago, maybe this point. Back in October of 2022 when you hit the lows, that's where you're trading right now. And so I do think that you have some support to, again, employee stock purchase plan, if you want to, add to it in case of earnings. But I think you could go lower. Now, remember, we were trading at 200 when the world shut down. So I don't expect it to go down there. But, Home Depot, it's a quality stock. I mean, listen, not something you're going to go poor with. Coca-Cola. Alex from Spotify. Can you look at Coca-Cola? It's one of my biggest holdings. I like stocks with good dividends and hold on to them for at least a year to cut my capital gains in half before I might sell. Thanks. Alex, I was contemplating, this right here, this slide, I was contemplating taking Coke out of the core portfolio. It's still in there. I am still holding this. I think it's a $60 stock. If you are going to trim anything, I think you trim it when it gets to 60. The problem that you have is that this fall was twofold. The strong dollar, because they're internationally focused, they're going to make less. Their earnings are already passed. You had the earnings and you had a nice gap up, and it's continued that rise up. And I think you're getting back to $60. I think you're going to get that death cross when you had it here in January of 2023, and you just popped above the 200-day, and then you just kind of slid all the way from July, the July highs. You just slid down. This was two things: weight loss and the weak, the weak international currency stuff. And so now you're seeing the weight loss drug probably isn't that big of a deal. International currency, they showed that they can make more with less. So basically they said they have pricing power. I like that stock. Now, here's where I kind of question Coke. And when I was evaluating the core portfolio and Coke in particular, I wanted to go over here to charting. And I wanted to look at the, we'll select metrics and we'll get out. Oh, I'm going to have to redo this anyway. Let's select the metrics, because what I want to do is performance and I want to do total return. And you can go to Seeking Alpha and do this. I believe it's free for you on Seeking Alpha. But if we select the symbols, I want to put it up against the Vanguard ETF, VOO. And I want to see, okay, where's VOO performing versus Coke? Well, in 1 year, Coke, you're down 4%. VOO, you're up 9.5%. 3 year, if you're buying and holding, this is why I want to do this long term. VOO, you're up 31% over 3 years. Coke, you're up 26%. So you're underperforming the S&P 500 over 3 years. 5 years, the S&P is up 67% over 5 years. Coke is up 37%. 10 years, VOO is up 181%. Coke is up 90%. This includes the dividend. This is part of the reason why I say dividends belong in your portfolio, but they should not be the main portion of your portfolio. Alex, you look young in your picture. Don't be Walter. Don't be that guy sitting with a blanket in a rocking chair in the old age home going, I'm in dividend stocks. I understand you like dividend stocks. I understand that you want cash. I understand that it puts out some type of thing for you where you can reinvest it. I would caution, this was the entire reason I thought about trimming and taking Coke out of the core portfolio is because the long-term prospect underperforms the S&P 500. Now, short-term, then Coke is doing 1 month. You look at Coke, it's up 0.73. VOO's down 3%. 6 month. You look at Coke, it's down 11%. VOO is up 0.8. So I'd be careful with holding that much Coke, but I do think $60 is your pivot point. I don't think you sell it under $60. I think you wait for it as long as you're comfortable holding it, because I do think that you could come down further if we get a recession. This one, even though they have pricing power, if we have issues, I think you come down. You've clearly, look at this. This is the weekly. And if I just say, okay, where's my likely support? Well, look at that bottom right here. You've got what? 3? Here, hold on. I misdid this one. I'm going to put this in because if you just start right here and you go straight over, you've got plenty right there at 53. In my mind, 53 is the support. This goes back to 2021. You don't want to go back here. Prior to COVID, this was a $59 stock. It was $60 and it was still on its way up. I think that's where you look at selling it, $60. Now your 50-day turning negative, but you're starting to get a positive. You're right at your 200-day at 56. It's going to provide some resistance. You don't have a catalyst to go up here, but I don't think that you trim this one under 60. I think you wait for over 60. If you want to get rid of it under 60, I think that's you're kind of playing with fire there. You're still going to go up. I think. I just think it's a $60 stock. Do I think it's an $80 stock? No. And that's why I say I think you're underperforming. I think $60 is where this one goes. I think that's it. So I'd trade it. Kevin, RTX, which is Raytheon, the old Raytheon, seems like a good defense investment given the current global climate. Yeah, I mean, I think I saw their CEO when they announced earnings. I mean, the guy was like, "Well, we hate what's going on in the world." I mean, I'm not a big war stock guy, but I agree with you. I don't think it's a bet. It's been beaten down. They're going to sell a shit ton of defense contract shit and war killing machines. So I don't think it's a bad thing. Look at that pop. The earnings came out. You popped from 74 to 76. So you do have a gap, but I think you put in the bottom there at 71. I don't think it's a bad trade. And I agree with you. With the current war climate, this one isn't horrible. You look at 2020 when we shut the world down. They had a pop here on earnings. You're not going back to that. You're not going back down to 62. This one, MACD cross up on the weekly. I think you're fine. I think you're good on that one. Morris from Instagram was wondering what you think of Kraft Heinz, KHC. At these low multiples, seems like it has to have a decent bounce back eventually once interest rates start to go down. Thank you. Kraft Heinz, I mean, okay, here's the thing. If you're going to the supermarket and the consumer, Coke, Pepsi, they have pricing power because you're not buying that off-brand cola for like 50 cents less. Now, are you buying the off-brand or the store brand ketchup for $1 less? My answer, absolutely. Absolutely. KHC is cheap, but it's cheap for a reason. And I don't know the whole reason, but the PE is 12. For a packaged goods company, that's a pretty big PE. Now, their dividend is yielding 5.14. It's down 23% year to date. The average target price, now it's covered fairly well. I mean, it was covered more in 2022, but the average target price is $38 and you're at 31. I just don't see a reason to get into it. I don't see a reason to call a bottom. I'd rather see you wait for a 5% pop up to like 33, 34, and then say, okay, the 50 days started to turn. There's no reason to get in here early, Morris. None whatsoever. Okay, that takes me to scans. And I'm going to basically put in a bunch of these scans. The one that I really like, Uber. Uber is up 0.4. It's at 42. I've pointed this out as the likely that I was buying into it, but it's got no confirmation whatsoever. Starting to get confirmation, 42.73. That's a good one. Walmart from the core portfolio is a buy. A little bit too expensive in my mind, 162. I think you want this under 160, but that 50-day is starting to move positive. I don't see a need to buy this. Their earnings are coming out November 15th. Probably good. Probably something about the Christmas rush. I like Walmart more than I like Target at this point. I mean, Target I took out of the core portfolio. Target's at 109 right now. Their earnings are coming up with their dividend November 14th. I'd have more confidence in buying Walmart at the highs than I have buying Target at the lows. Just my thing. Goldman Sachs, we talk about book value. A lot of banks are trading below book value. Goldman Sachs is one. Goldman Sachs book value, I think, is $319. $300.76. Get this under $300. Get this under $300. I just think it's a quality name. As the economy starts to turn around and we start to get more IPOs, I think they're solid. Tesla, we talked about shorting Tesla. You know what you don't short? XLY. This one was up about 1% yesterday. The reason it's got a cross up is because Amazon is so strong. I said buy Amazon. I timed Amazon correctly. This XLY is basically Tesla and Amazon. And I own a bunch of this. And I did buy more Amazon at 120. Amazon has a buy in the algorithm at 131. You're going above this 200-day. You're not using that as resistance anymore. I think you're going to 140. It's at 132 right now. I think you're going to 140. Now, I am holding this one. So it's not like that $20,000 that I bought at 120. I'm selling at 140. I'm going to try and create a new base. The paid subscribers of the newsletter understand this. I basically hold a large, long position in Amazon. I do trade in my retirement account with Amazon. And if it gets to 140, I'll probably start trimming at that point. But the $20,000 that I bought, there are two positions. One was from like 2015 or 2018, somewhere in that neighborhood. Where I have the average price of Amazon significantly down. I wanted to create another base at about $120. As this one pulls back to 120, if it does, I'm just going to buy more. And I'm going to create that base and start selling that long-term base in order to basically get out of the position at a significantly lower price so that I can start paying. It's a tax thing. And I still want to hold Amazon. I still want the same the same allocation. The allocation will go up until I start to trim. But Amazon, solid AI play. Solid play. I just timed it correctly. Microsoft, solid AI play. I just don't see a reason to get rid of this one, to start trimming. I don't see a reason that you're not buying when you're around this 200-day at 330. $330, I think, is your swing. 340, I think, 336, 5 years from now. Are you upset that you bought Microsoft at 336? I just don't think so. Morgan Stanley. KOLD, ironically, has a cross-up. Even though it is way down today. It's down 11%. Boyle is, natural gas is just getting a pump. Boyle was down to about 60. KOLD has the cross up at 52, but there's no reason to buy this one. I think natural gas is just down too much. I think it's hugging, Boyle is hugging this 200-day right here. The algorithm got you out here with Boyle at 11% loss, but if you bought at 67, you're almost back to even. Yesterday was just it's been a bad couple of days for Boyle. I think Boyle's going back to 70. I think it's going back to 70, and I think you sell it over 70. I think this leg where you're coming down to the 200-day and then you're moving back up. Remember, these are decaying assets. This is not a long-term thing. So a 200-day that's starting to turn positive, that is just, hey, it's been beaten down enough. Take a look at how much this one was beaten down. If we go to a weekly, just take a look at how quickly this one came down. I mean, and that's with a reverse split of 20 for 1. So 1 for 20, I should say. So yeah, you've got some confirmation. You're putting in a base here. I think it goes to 70. Your average VWAP, if we pull it all the way back to 2018, it's at 158. Just understand this isn't a traditional, this is a trading tool. Now, another trading tool that was way up yesterday and is way up again today. Or I'm sorry, it's even today. DPST. 4406. This is a decaying asset as well. You can see that line right there represents a long-term trend line. If we go to the weekly, you'll see the long-term trend. You want to touch 3 points. That's where I think it gets to. Now, the 50-day is starting to come under there. You're seeing extreme weakness. But what do you see here? I mean, DPST is heavily, heavily traded. Look at the volume. It's never been traded like this. Now, it's been traded on the downside, and you have no confirmation on the weekly, so be very careful of that one. Vanguard Group, the Vanguard Group, if you're on TrendSpider, the Vanguard Group had a bunch. Just buy TrendSpider. Get in on the deal. As far as sectors goes, XLY, we talked about. This is basically Tesla and Amazon. XLY had a buy-in here. It's got a nice bounce at 150. You want to be careful because Amazon's driving this while Tesla's bringing it down. XLP, this is the consumer staples. I don't think you get into this one. I think there's further weakness ahead, but it's kind of capitulating around here, 67. If we go over here to key market data, you can see XLP right here. This is Seeking Alpha. 3 years, it's up 8.61. Greatly underpacing technology. Greatly underpacing financials. Greatly underpacing energy. Greatly underpacing industrials. It's underpacing everything. Even in the short term, it's losing money. But you're down at the 52-week range. You're down at the bottom of 65. If we're going to see a pop, maybe you see it. But your top is only 79. So XLP, I'm not a big fan of. It's one of those cyclical ones. XLB Materials. This is Cleveland Cliffs. I mean, this is down at the bottom here. 75.66. It's been beaten down. You go over here. XLB, Basic Materials. Where are you? You're down towards the bottom. Your top is 85. You're trading right now at, 75.76. So you're right in there. You're right in that range. 3 years, you're up 20%, greatly underpacing most of the other sectors. 1 year, you're up 1.31. Everything below that, yeah, you're down. So remember, year-to-date, technology, consumer discretionary, which is XLY, and communication services. Those are your three sectors, the only three sectors that are in positive territory. Everything else is down. So remember, the grade 8 is what's holding up this market. FedEx got a cross up. Jumia, on. We talked about on. This one is super expensive. I do think in a good market, this is a $30 stock. After their earnings last time, it just came down. They couldn't grow as fast as the multiple needed them to grow. They had 4 cents of gain, 5 cents of earnings gain. Now, what's the earnings going to be on November 14th? Who knows? The RSI is in no man's land at 50. But it's got a cross up here at 25.31. You don't have confirmation. Be careful with this one. What's interesting is the algorithm over 24 months. You make 6% using this 4-hour algorithm. When you get in, when the algorithm says, and when you get out, when the algorithm says, you make 6%. What do you make over 24 months with just buy and hold? You lose 31%. So again, the volatility, the algorithm saves you from the downturn. Look at that. Got you out with an 11% gain right there and saved you right before earnings. And then it got you back in. Got you with a 1% right there. Saves you. These few, you lose. You lose, let's see, your average win is 12%. Your average loss is 6%. You win 41% of the time. So you don't win the majority of times, but you do get in. The algorithm gets you in on those big, big moves. I'd just be worried that you don't have confirmation right now over that 9-day and that the 50-day, it looks like the 50-day is providing you resistance. Until you get over that 50-day at about $26, I wouldn't buy into this one, even though the algorithm says to get in. One that was interesting, a chart as far as the cross-ups go and scans, is Fortinet. I've said, hey, this one started to cover that gap. If you bought here at 59 at the bottom, you should have absolutely sold around 60, 64. Once you lost that confirmation, the algorithm got you out when you lost confirmation with a 2% gain. It's just been a slide. I would be worried about the 50-day still moving negative. But Fortinet got a cross up there. Another interesting one that came up was BlackRock. as far as a cross up. So the BlackRock, this one's starting to button hook, hasn't button hooked all the way. Again, I'd be super, super nervous. This is commercial real estate. Now, the algorithm makes you 4.3% over 24 months. If you just bought and held this one, 34%. All of this points to you should be buying the pre-Black Friday sale, $250 for TrendSpider. Now, mind you, this only has 14 hours to go. So if you miss this sale, don't bitch at me when the Black Friday sale isn't this low. $249.60. The Elite is what you need. If you want to look at Elite Plus, absolutely. Look at Elite Plus. $372. Look, you save $1,263 on Elite Plus. It's only $372 per year. Look at the difference of what you get. Your plan comparison. You just look at that. And you can see what you get. If you're going to use bots, if you're going to do some futures trading, if you're going to do Benzinga Pro News, which is similar to what Seeking Alpha gives you, capability, smart checklists, multi-symbol view. I mean, just this Elite Plus gets you significantly more at just slightly less cost. Remember, the regular price is $384. 7 days free, you could pay $780. But if you take advantage of the Black Friday sale, this one's only $372. So you can get my algorithm with this one too. The minimum you need is Elite, and this is $250 a year. So if the algorithm with BlackRock, with all of the things that crossed up, understand you can get this and scan for all of this too. Say you have a stock that you like, go and use my algorithm to scan for it. It's quite simple. PXD. Look at PXD. PXD, I think we're out as far as PXD goes. Yeah, should have gotten out. 238, not too low. I'll probably start to trim. Their earnings are coming up. I completely expect them to announce some type of crazy special dividend. I don't know if Exxon's going to allow them to do that. I don't know what the actual regulations are with that. But understand that that's the algorithm works. And this gap right here between 215 and 230, that is when Exxon announced that they were buying them. I would look at that 230 as a support level. If you break that support, look out below. But I think they're expecting this to close in January. But yeah, any of the links, Linktree / daily stock pick. TrendSpider's obviously the sale. Get in on that one. Seeking Alpha, you get $50 off. Webull, I love Webull. Join the newsletter. Get $20 off your first month on Visible. If you have a phone service where you're paying more than $25 a month, you're crazy. I get unlimited talk, data, text, the whole thing on 5G networks, including a mobile hotspot. A couple weeks ago when I was in Philadelphia and I didn't have Wi-Fi on through the hotel. The hotel Wi-Fi was down. I just used my hotspot to do this podcast. It's great. It's unlimited. I don't have to worry about it. It was great. So your first month is $25, but you save $20, so you're only going to pay $5. Go and sign up using that link. If you're going to get a Tesla, get $500 off, 3 months of full self-driving. They have some really good deals on Teslas right now. I got to tell you, they've been producing more than they're selling, so you can pick it up same day. Get AT&T fiber at your house. I have 1 gig service. Savvy Trader. Follow my trades on Savvy Trader. Anything that you need is right here. You can gift me, sign up for Venmo, whatever you want. It's Linktree. Okay, I will talk to you guys tomorrow. Remember, after the bell today. Tomorrow, pre-market, we have Palantir. Maybe I'll get on early. I don't know. We'll have to see what happens. But we have Palantir early before the bell. We have AMD after the bell today. So I like AMD. Okay, sorry about the power outage. I will edit that in. I'll talk to you later.
Every
Bye.
morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.